Welcome to the Seatrade Maritime Podcast. I'd now like to turn to Tim Smith and welcome him back to the podcast.
Hi, Marcus.
Hi, Tim. And I'd like to talk to you a bit about the tanker market. When we look at crude tankers, we've seen a weakening of rates at the back end of 2024, particularly for VLCCs. Is this set to continue into 2025?
Yeah, certainly Q4 went against expectations. Often we see conditions improve in that period for the tanker sector. And as you mentioned, we saw a definite deterioration in the market. That was apparent for the VLCCs. It was apparent in other sectors as well. And also product tankers saw significant drops in Q4. Yeah, conditions, I think, for the tanker market are similar in some respects to what we've heard for dry bulk and in other sectors as well, where we see some shift in terms of the supply outlook, the fleet outlook. 2024 saw what will likely be, when all the numbers come in, the second highest year of contracting for the sector, around 60 million deadweight ordered. And we also saw some structural changes in the market, in particular, again, reflecting some of the comments we've heard about the dry sector and looking at how China's evolving. And in China, in 2023, we saw an exceptional period of oil demand growth as a result of the slightly later release of COVID restrictions. 24, actually, we saw a real flattening off in terms of Chinese oil demand. And that's coming about partly because there are factors impacting, such as vehicle electrification. We're seeing very strong sales of electric vehicles in China, and also increasing use of gas in the trucking fleet as well. So these are factors that are going to be impacting the market for some time. As in other sectors, we also saw the continuation of things like the disruption in the Suez Canal, but not increase in that. As we've heard, that's largely baked in now to the view. So our expectation for 2025 is that tanker market conditions relative to 2024 average levels will drop as a consequence of increasing deliveries, as well as, if you like, kind of normalizing demand growth, unless we see some other major disruptive event impacting the market. Conditions are likely to soften, and that's our view not only into 25, but generally I think the tanker market has seen exceptional demand growth for several years, and we are thinking that oil demand itself is going to come under some pressure from China. We don't see those factors as ones that are going to go away. So structurally, oil demand growth is going to decelerate, and trade growth eventually will track that. It may be slightly higher, but it will track towards that. And I think perhaps one of the things that maybe is more under the radar in 2024 was the real weakening in the refining sector. And the tanker market really is a component of the refining sector. We really saw refining margins soften considerably across the course of 24, and I think that's playing into the weaker tanker sector. Also, we saw trade volumes flatten out in the second half of the year as well. So it feels like we've moved out of any kind of exceptional demand side growth. And meanwhile, we have this order book growing and deliveries, which again for tankers in 24 were very, very low. They're going to start increasing now. So it feels like the conditions are stacking up against the tanker sector, or at least the demand side has to do a lot in order to counter the supply side.
Yeah, it's quite a bit of a different picture from what we've seen over the last 2-3 years. I think it's very interesting what you said there about the impact that just like the shift to electric cars and so forth is happening in China, and the fact that it's actually enough to impact the market in terms of demand. Just coming back to sort of like you mentioned, the sort of oil demand in 2025 and also the fleet growth. Can you put numbers to those?
Yeah, I mean, we're expecting the oil demand itself to be around 1%. I think the China, certainly in recent updates, we've revised down our expectations for China in terms of overall demand. As you mentioned, the electric vehicle side of things really is growing very fast. I mean, just to mention, through the course of 2024, we saw sales of electric vehicles outnumber conventional vehicles in China. So, that is happening now. The fleet side is picking up. It's still not going to be kind of unmanageable in 2025, despite the fact that we've seen very, very low scrapping levels. Deliveries are picking up, but we do expect fleet growth to outpace demand growth in 2025. We'll probably be looking at somewhere around 2 to 2.5% on fleet growth and 1.5 to 2% on demand growth, so not miles away, but starting to shift the market. But there certainly is potential for kind of more low case on the demand side. And I think we've seen OPEC Plus continue to push out their production cuts at the end of 2024. So there's a lot of concern around underlying oil demand in that regard. And so, there's certainly some downside risks to things. And we mentioned as well that the Suez Canal situation could change at any point. And given that we've got the kind of maximum amount of disruption that's supporting the market, that change would be potentially negative for the market were that to normalise. So that remains a kind of uncertainty, but it's a kind of downside risk now.
So quite a bit of downside sort of factors there. Just looking at Trump coming in the US, he seems to be quite sort of pro, I guess, traditional energy versus alternative energy. Does that make a difference?
I think so, yeah. I think in terms of our outlook for North American oil demand, we have pushed that up somewhat. He is likely to remove the support for electric vehicle purchasing, for example. And I think there's a bit more uncertainty around, from the consumer perspective now in the US around electric vehicles and their benefits. It does add some potential upside to the oil demand picture as a consequence of that. But I think there are factors that may also go counter to some of the rhetoric perhaps that we've heard. Donald Trump in his election campaign was very pro oil production increases, and the phrase drill baby drill was quoted a number of times. But actually, when you listen to some of the producers, them in the US, oil producers are more concerned about the impact of, for example, tariffs that might have on their supply chain, being very cost conscious and shareholder orientated. Those are perhaps the more bigger factors in reality that could actually impinge on production. So that remains quite an uncertainty. I think from a trade perspective, we know that there is some trade, for example, between US and China, US crude exports to China, not insignificant, but also probably not a game changer. More antagonistic geopolitical situation is likely with regards to Trump, potentially with Iran and also with China. So those may factor into the tanker side as well in 2025.
So quite a complex set of factors to look at there, but overall, probably not as good a year as we had in 2024.
No, I think that's a reasonable summary.
Okay, great. Thank you, Tim. If you've enjoyed this episode of the Seatrade Maritime Podcast, make sure to subscribe on the app of your choice, and we look forward to joining you on the next episode.